Welcome back, everyone. This is Not Your Advisor with NYU Grad on Monday. They often say how simple someone can explain a concept usually shows their level of mastering that subject. So here goes. I'm going to actually repost in the show notes the actual full lesson in its entirety. It's called Market Profile Charting for Dummies Remastered. Now, that does sit behind a paywall, so you won't be able to read the whole thing if you're a free subscriber, but it's there for you to kind of preview like 1/3 of it. And if you were curious to continue, you can upgrade. But my basic explanation and 101 lesson for this from market profile charting is really simple. Stock prices or prices of anything, whether it's Air Jordans, a Porsche, a Rolex watch, prices of anything in auction, a marketplace, are either in one of two stages, to keep it simple. Number one, the prices are in balance, which basically means they're trading in a range of $10 and $20, let's say. I'm just using this as an example. And it facilitates trade between buyers and sellers for the longest period of time or volume, depending if you're looking at market profile charts or volume profile charts. The other stage for prices of anything in a market is out of balance. That's where the price range does not meet sufficiently the demand of buyers or sellers, and prices have to move violently above or below that previous range. And that's really it. Simple as that. If you go into the full details of market profile charting for dummies, not only will it explain why this happens, why this bell curve continues to happen in every time frame across all asset classes, it will also kind of show you how a market profile chart is calculated and created and how to read it. But I'm going to give you a quick sneak peek here. So I have a photo from this past weekend here in New York. This is a photo of the Woolworth building. At one time, this was the tallest building in the world in downtown Manhattan. And if you've been following me, you'll know that I have a semi-photographic memory and a very associative memory. And once I learned about market profile, I literally just started to see market profile charts everywhere in my natural world. And now whenever I see buildings, I see market profile charts. So if you turn the building sideways, you'll see the bell curve, and you'll see the distribution of this bell curve. And typically what happens is the tallest building, which represents the most amount of time for a thing to be priced at. So let's say the middle range was $15 and the bottom was $10 and the top was $20. Prices typically will trade as close to the middle as possible for the longest amount of time, because that's where a lot of people are going to agree on the price. It doesn't have to be directly in the middle. Sometimes it's a little offset, higher or lower. It doesn't have to be in the middle, okay? I'm just giving you just 101 basics here. And that price is the high volume node, and that acts like a magnet, and you'll typically see prices violently go through it up and down, and basically going to the edges of these price ranges. And if you look at the edges of the range, prices don't spend much time there. It's rare. Unless they're getting ready to leave that area, they typically kiss it and then violently get bounced to the other side of the balance area. Or they'll kiss it, form a little mini balance area, and then break out up or below it. So that's really it. That's my 101 summary elevator pitch on market profile charts. But I hope you take a look at the full post and upgrade and join us And I'll leave you with, or I'm not going to leave you, but I'm going to also leave a visual example. And I'm not picking on Starbucks, but I'm going to use this because it demonstrates it really nicely. So this chart encompasses Starbucks right before the COVID lockdown. And you can see the V bottom that it created in 2020. But pay attention to these price ranges here. And the first one in red, I tried to color code each one differently so you can see them, is about a year. The long one in purple is about 18 months. But real simply, for the year in the red balance area, there was an agreement between buyers and sellers. There was one episode in the middle of it where it tried to break out into lifetime highs and they failed. So it came right back into the balance area, and look where it bounced. It bounced right at the high volume node. It tried to break out again, and then it failed, and then went all the way to the other side of the balance area. But it kept getting defended there. It once failed to the downside. Do you see that? But then it V bottomed back into the balance area, and it almost went to the other side. So this is just basically the market facilitating as many sellers and buyers of a thing. But once the range cannot sustain these transactions anymore, it violently moves out. And that's called an initiative move. And this violently broke down. And it went from $110 to $65. And you can see here it's a light yellow range, but it carved out a smaller balance area, and then it broke out of that, and then it carved out another one, and then it broke out of that, and it carved out another one, and that one lasted over a year. But it's a messy one, and as you know, the reported earnings last week, and it wasn't too pretty, and it crashed. It went from like $90 to 74 or $73. So what's basically happening is it's out of balance. Prices are now seeking a new area where the majority of buyers and sellers can facilitate trade for a while. So it's seeking balance. We don't know where it's going to flush out. There's no point in guessing, right? And you just wait until buyers and sellers agree for, whatever time frame you want to trade this. So hopefully that made sense. A lot of the paid members are getting this, and they're really understanding it. The beauty of my Substack is my paid subscribers are now able to do this and fish on their own and come back to me with ideas for just another set of eyes or a gut check. And that's the whole point of this Substack that I've created. I want to teach folks how to swim. There's a lot more nuance to this than just drawing boxes. I guarantee that. But again, I'm doing a elevator pitch 101 if I had to teach someone that has never had a brokerage account, has never traded anything. So that is just a introductory 10-minute overview of auction market principles.